is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Tampa. Hey, Al, what's going on?
Oh, it's a beautiful thing. I mean, if your listeners don't get the gold report, they're missing out. I mean, with your gold report, you just printing money. I love it.
You're my best ad out there, Al. Let's go to Jeff in New Jersey. Hey, Jeff, what's going on?
Great. Hey, listen, I was calling to thank you. A few weeks ago, you were prompting on your show to fill out that $10,000 grant.
Yes.
So I filled it out, and just a couple days ago, I found $1,000 in my business checking account.
That's awesome, man. That's awesome. Yeah.
And I owe it to you, because if it wasn't for your prompting, I would have just assumed, no way I would have gotten anything. So I wanted to thank you.
No, we appreciate you growling a problem with us here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We got 5 days a week. We got 7 hours a day. We go 24 hours a day in the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a happy Halloween, man. Make it a safe one. Always do your best. Take action on your ideas. Doing your best means to take action on your ideas. You have many great ideas in your head, but without action upon an idea, there'd be no manifestation, no results, and no reward. Market-wise, let's take a look at it out here. We have the Dow Industrials down 155. Dow Industrials down 153. NASDAQ off 124. S&P's down 31. Gold contract down $8, trading $16.36 an ounce. We have silver flat, $19.10 an ounce. Light sweet crude down $1.45, $86.43 a barrel. Notes and bonds. The 10-year note down 14 ticks, trading 110.18. The 30-year is trading down 27 at 120.12. The 10-year right now, folks, is yielding 4.08. The high for the year is 4.24. And King Dollar. King Dollar up 818 ticks, trading 111.570. The euro at 98. The yen is trading at a price point of 148. And the pound is 114 to 1 U.S. dollar. Let's get over to our man, Mr. Dave Mazda, head of product and managing director of Direction. And as you're over at our website, folks, you'll see the Direction banner. Just hit that banner and you are off to the races. Dave Mazda, how you doing?
I'm doing well. How are you? Happy Halloween.
Happy Halloween. And when I read that card, I think of you and Direction a lot. Take action on your ideas. And, when I look at the context of, the last 5 years, it's pretty amazing that how far ahead of the curve, Direction really is in the context of getting product out to the marketplace that, people like to trade.
No, exactly right. We appreciate the support. One of the best things about ETFs is that whether you're a long-term investor and you want to go find and build a portfolio at zero cost, you can do that with ETFs. And you can build a global portfolio under 5 basis points, literally set it and forget it. However, in this market environment, there really is an opportunity for folks interested in trading. With that being said, you need to have the aptitude and ability to do that, monitor portfolio positions, leverage resources like yourself. And so for the folks tuning in today, and which is one of the reasons why over the last couple of years, and even through this year in the volatility, we've seen a real uptick in flows and volume in Direction's leverage and inverse ETFs because, it's great when you look at your portfolio and it's just up 25, 30%, and you don't have to do much. Just buy the NASDAQ, buy the S&P 500. Those days are over. And that's one of the reasons why, we've seen an increase in activity both in our broad-based leverage and inverse ETFs, your SPXL, SPXS. That's been interesting. On the fixed income side, as we've talked about before, TMF, TMV, and then into more niche areas or narrow areas, whether it's single stocks in this earnings season or, some of the other exposures that we're seeing, and a big one has been energy, as that space has finally kind of come back in the forefront. and some of these earnings that they put up have been remarkable.
There's no doubt. You know what's so cool, Dave and folks, is that, when you look back, it's like, as we're talking about, if you're building a portfolio, it makes so much sense to build a portfolio in the ETF sector. What's amazing about it, folks, is this. So picture, the mantra always was, folks, okay, you want, a balanced portfolio. And the reality is, it was a lot harder getting a balanced portfolio that you'd buy this stock and buy this stock and buy this stock when you can go in the energy ETFs. You can go in your bond ETFs, whether you're a bull or a bear. That's up to you, folks, okay? But the bottom line is that you can build a nice portfolio. And now I'm talking about the single ones at this point, folks, okay? But you can build a nice portfolio. Then, as markets that we have right now, exactly, that you can either leverage it out and trade it, or basically hedge it out to the best of your ability. So it's amazing to me that how fast the acceleration has actually gone, Dave. But now it's almost common sense that you can see it's just not going to stop because it's a better deal. It's a better deal because you could actually trade or invest in more products with one product. That's how it comes down. Do you know what I mean? If you think energy is going up, you're in. If you think that, I'm sure you're getting a lot of action in the bond market now too, right? Energy and bonds are just unbelievable.
Yeah, exactly. So, even as energy as an investment started to come back, as the price of oil was ripping to start the year, the commodities complex came back too. We actually didn't see traders begin to gravitate toward a handful of names, and I'll throw out a few tickers for folks. That's ERX, which is a 2X bull fund,
right.
ERY, 2X bear fund, then Gush and Drip, again, a bull and a bear on the 2X side. Gush and Drip are for just oil and gas companies, so actually a little bit of a higher beta play on the energy space. ERX, ERY are full S&P 500 energy names. And it was interesting to me because I was kind of waiting, saying, when is this going to happen?
Right.
When are we going to see a rotation away from people continuing to trade your tech names into it? It's really happened in the last month or so because I think there's not a retail capitulation. In fact, I think we've seen institutions start to capitulate, but we're now seeing retail traders and others begin to say, hey, where are the opportunities going to be? This inflation story, transitory has been thrown out a long time ago. We got a big Fed meeting this week. I think we know the answer there. Probably going to be 75, but what comes next? And we're already hearing from some of these companies, whether it's Meta, more importantly, I'm thinking like an Amazon, or even to a lesser extent, Apple, even though, man, that company shows a lot of resiliency in any operating environment, that, hey, things are not looking so hot for 4Q and even into 2023. But the space that may continue to kind of be even more resilient, again, not to call it Apple here, is that energy complex. Obviously, we'll get some headlines on whatever situation, pipe dream of putting a profits tax there and carbon tax. That's a conversation for another day. But it's still going to create an opportunity, especially in the midterms, for some real activity here, both on the bull side and the bear side.
Yeah, huge opportunity. And I'm so glad you brought up the capitulation, Dave, because I was asked that. I was on the TT Ameritrade network the other day, and I said to the host, I says, when capitulation comes, you're not going to be asking any of us that. Have a great one, Dave. Look forward to speaking to you 2 weeks from today.
Thank you. Talk soon.
Thank you. Stay right there, folks.
And bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now trading down 166. We get the Nasdaq off 129. S&Ps are off 33. Let's get over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the hour. And don't forget, folks, Steve has an outstanding show here every trading day, 1 to 2 Eastern Standard Time. Also has a great newsletter, the Mastering Probability. Now, it's very easy to get Steve's newsletter. Come over to our website at TFNN. You're going to go into newsletters. You're going to see it right on the right-hand side. You just hit that subscribe button, and you get Mastering Probability for 1 month for $149. You get it for 6 months for $695, which is a savings of $199 at 22%. And you get it for a year for $1195, which is a savings of $593 or 33%. Steve Rhodes, what's going on?
Well, happy Sweet Tooth Day.
Yeah, I know.
Now, I know one of the things that you and I have in common is our appreciation and love for dark chocolate.
Oh, yeah.
Right?
Yeah.
So now, do you have like a favorite, dark chocolate bar or something that you go to?
Well, you know what it is? We have William Dean right here. So, he's a chocolatier, the real deal.
Really?
So, yeah. So,
okay.
I went up there for the, for Tommy and Landon and Allie for the not Thanksgiving, Halloween, yeah. I love that place.
So my place, and I just love dark chocolate, good dark chocolate. And I think you guys have one in St. Pete. It's called Kilwin's.
Oh, I love that place. That's decadent. Yeah.
Right?
Yeah.
So their ice cream is amazing. Isn't it?
Listen, man, I have left the office, Steve, and gone down and got a hot fudge sundae with vanilla ice cream, because you can't get that too many other places now, man. I just want vanilla ice cream and real hot fudge with marshmallow on it, man.
Okay. Well, hey, the next time you're down there, check out their dark chocolate non-perils. Okay. I don't know what it is that they do to that chocolate, but it's amazing.
Yeah.
So that's our sweet tooth. So happy Halloween to all the Tiger bulls and bears that are out there. And I suppose that most folks are asking the question, was last Friday's explosive move higher a trick or a treat?
I love you, man.
So we got to try to figure that out. And this chart here, what I thought we would do is take a look at some of the seasonal patterns out here. So this chart represents the average price movement of the S&P 500 during the midterm election years. And for the S&P, we've got 72 years worth of data. Now, that's that basically equates to about a little less than 20 specific instances. The red line, the red vertical line, So it's over 72 years, but it's 4 years apart for each midterm. So if we take a look at the red line represents where we're at, and that would seem to indicate that that last Friday's action is just another confirmation of a market that should continue to move higher and rally into year-end. In fact, we hear a lot of people on television talking about this seasonal impact, and you and I have talked about how the market typically makes a low in the mid-October timeframe and then moves higher on through that. So I understand that typical seasonal pattern. The cool thing here with these folks from SeasonX is we've got these. It's very easy to take a look at any instrument for the most part and understand what the seasonality is. So that's the S&P 500 for the midterm election years. However, this is the chart for the S&P 500 that represents the years after a midterm election. So the midterm election is next Tuesday.
Yeah.
We want to know what takes place after next Tuesday. Right?
Yes.
And so when we take a look at that, and I just use those specific years, well, this suggests that we see a sideways to consolidating move into the towards the end of November out there. So if we look at, lastly, if I take a look at a bear market years for the S&P 500, so really three areas we're taking a look at. One, what's a typical midterm seasonal pattern look like? Two, what's it look like after that? And then three, which may be more important, what does it look like when we are in bear market years out there? So, Tom, you'll see here, and those folks that maybe grab the screens, the check marks that we have on here identify the actual years that are being used. So people can try to build their own. Now, what this tells us that the market should move higher into the end of this week, which kind of lines up. So it's pretty. When I pulled this chart up, I was like, "Wow, that's pretty cool. That's pretty interesting," because this all lines up with that nice move on Friday. We should see some window dressing. We should see the end of month, movement into move higher, the money being put to work, and that should end by the end of this month. And then the market moves lower pretty precipitously into the end of November timeframe. So that's for the S&P 500. Here's the Dow's bear market during the last 125 years. And again, all the check marks represent the years that are being tested. So we go back as early as 1901. And what this shows us here, again, the red line is where we're at, Tom. Yes. This shows us that we should rally through the end of the week and then move lower. Now, this shows us, in the case of the Dow, moving lower into the end of the year out there. The NDX 100, if we take a look at bear market years, because we're definitely in a bear market out here. So if we take a look at the bear market years over the last 37, which is only 6 data points. So the S&P is maybe a little bit more useful, the Dow more useful because of all the data that we have. But even still, in the NDX 100, this suggests a rally into the end of the week and then basically move lower into the end of the year. If we also take a look at last Friday's rally as it pertains to the Dow specifically, this chart here shows diagonal and horizontal trading range boundary lines. So, folks, the green lines out here, these are really courtesy of Bud Rolfs, who developed those horizontal trading ranges, or what he referred to as primary trading ranges. And those green lines, is pretty amazing how price will typically stop at one area. If it can clear one area, we'll either move up or down to the next level. But what we also have, those are the vertical horizontal trading ranges. As an example here, at 34,152, there have been 10 instances of either opens or closes very near that price point. So that's what the numbers to the left of the actual price points show us here. But what I also have is a rising price channel and a descending price channel. And interestingly enough, and I don't know how this works, I just know that it works.
Yes.
The price on Friday ran all the way up to the top of that descending price channel.
Isn't that wild, man? Yeah, I know.
I was like, how does that work?
Right, exactly.
But it does. And so I've got a little dashed blue line up there as well, Tom. And so price could exceed that or at least punch up to that level. If it exceeds that area, it says we get up to 34,152. But right now, all of this is suggesting that really what last Friday was more of a trick than a treat, or a very short-term treat out here. And here's the real kicker. Last Friday's move was definitely explosive. But I've taken a look at the bear market of 2000, the bear market of 2007, and then what I call the bull market from 09 to 18. And what this shows us, these blue boxes, they represent 2% moves or more. The next one is 3% moves or more. And the next one after that, where you have one-day rates of change of 4% or more. What you'll see is that in bear markets, we hit the 2% moves or more are predominant out there.
Yes.
In 2007, it was about over 10%.
Oh, yeah.
And during bull markets, it's where you get the fewest number of large moves out there. And if we take a look last Friday, during the 2022 session so far, 208 sessions, this has seen 21 trading days with moves greater than 2%. It's all signatures of bear market rallies out there. So I do believe that the answer to the question was, this is more of a trick than it is a treat.
You know what's amazing about that Dow chart you brought up there, too? 2018, December of 2018, I think the S&P went down like 350, 400. Because I remember sitting here doing the program, going into Christmas Eve, saying, "Wow, man, Merry Christmas, man." We, exactly,
yes, absolutely.
Man. Listen, folks, get over to our website at TFNN. Hit Mastering Probability. You are off to the races. Steve, you have a great one, safe one. We look forward to the show tomorrow.
You too.
Thank you. Stay right there, folks. We'll come right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now down 89. NASDAQ is off 104. S&P's down 24. Let's go to our man Frank in Gloucester. Frank, what's going on, brother?
Hey, how are you, Tommy? Doing okay.
Good.
I guess the season's over, but, fall is beautiful.
There's no doubt. There's no doubt. You're not going to have snow for a while, Frank, so you'll be all right.
I hope not.
So, Freeport McMoran, right?
I'm looking at FCX, and the daily chart shows a breakout on volume the other day.
Yeah.
Last week, actually. But it's pulled back below that swing high that it broke, and there's virtually no resistance on a price-wise above that swing high. But if you look at a weekly chart, there's a big supply line running against you at that point.
There is. And this is really cool, folks. Okay, so if you're watching Tiger TV, what you're going to see here, this is it's coming right up to basically ice, and that's where the downdraft basically it broke the 33.41 area. My take on this, Frank, I like how see how so if we go back on the weekly, the first week, that's the week of the 26th, August 26th, we had 76 million pushing, right? Then 2 weeks ago, you pushed with 95. Last week, you pushed with 81. So 81 is still better than 76, all right? It looks to me, there's a lot of gold stocks that are set up just like this, too. And Wednesday's going to be the number, man. That's what it comes down to. Because what I did this morning, Frank, on this one here, I kept looking. I'm saying to myself, man, this thing wants to bust up. And then I went to the copper chart, and I says, well, the copper chart doesn't look that great, man. So if it's bust up, it's going to have to be that the dollar, is going down, because copper, we're at 337. It looks like it's, still in this consolidation and actually could get into, 324. So.
Yeah, copper looks terrible.
Yeah, it does. It does. And, what has happened is that, you have a lot of these copper companies, they're pushing copper like crazy, folks, because, fundamentally when you put out the numbers of what cars need in copper versus what they need now, meaning the electric vehicles, it's huge, man. I mean, it's like astronomical how much copper is in those EVs. But guess what? Yeah. I also know that there's so much copper in the world, it's unbelievable. I mean, the silver mines, their byproduct is copper. I mean, so, there's plenty of copper in the world. It's not like copper's going to go away.
Hey, what do you think has to happen on Wednesday for gold to go up versus down?
I think what has to happen is that in the statement, they're going to basically, they would be saying that they're going to be laying off and not being as aggressive with 75 basis points. So the Fed has already told us that, they want to be at 4.75 by the end of the year. Now, so they're going to be, folks, on the discount rate. I have this up right now. They're going to be, the discount rate now, they always do the discount rate is actually 3.25, but they go a band, 3 to 3.25, but the discount rate is 3.25. So that gets us to 4. The next one, is either 4.5 or 4.75. And I think it's going to be in the statement, that the market would pick up that they're going to, basically back off for a bit and then see if, in fact, the squeeze on rates has basically got the inflation genie back in the bottle a bit, Yeah,
I wouldn't be surprised to see him back off a little going into the election. Every incumbent politician holds the key to a lot of good times for corporations, and if they give them a break here and going into the election, especially where the incumbents need it.
It's going to be really tough to toe the line. There's no doubt. So my take on it, Frank, is this. My take, folks, is that it's going to be 75 basis points. They're probably going to say 50. And then what they're going to get into is it's going to be the length of it. Because, if they stick to their guns, and this is a long time, that'll do some destruction to the economy, man.
Yeah.
So I think it's going to be a length deal. And that's why, like, right now, the market is really tricky right now. I mean, I was bullish last week. I was bullish for a couple weeks. Right now, I'm really bearish. Right now, my take, the contraction in volume, folks. So check this out. This doesn't happen when you get huge runs, okay? Let me see. Watch this. The contraction on volume on Friday. So on the NYSE, we didn't even do 1 billion shares. I mean, are you kidding? 964 million we did, okay? And then on the composite, we did 4.6. That doesn't fly, man. So that's telling me that, and maybe it will be only the next couple of days. That's why I can't wait to see, kind of today is really like almost a sideways day, actually. I mean, we're down 20 points, but 20 points is nothing on the S&P. That's like a sneeze these days. So, I mean, I think we'll get a little more information, as this thing backs down a bit. So.
Yeah, I mean, on Friday, it sure looked like they pushed the Dow, pushed the heck out of the Dow on Friday. because they could, because it's only those 30 stocks.
For sure. For sure. And, I know you're in the den. I mean, this was a replay of the last time that happened, too. That, the night before, everything's down, is about as deviant as it can get, and then let's run it up, man. Do you know what I mean? And I can picture. So what happened there, folks, I can definitely picture. If you were in front of a machine on Thursday night, let me tell you something. Amazon blew their brains out. Microsoft already had. Apple was just flat. So there were plenty, of indications that what I suspect would happen, Frank, is that a lot of people sold into that after the close, because it looked like a disaster, man. And then all of a sudden, they woke up in the morning, and by 7:30 in the morning, folks, this market started clawing itself back, and they probably had a cover. I mean, that's what I'm thinking. That was probably the bigger aspect of what we actually saw, So
yeah, a lot of short squeeze too.
Right. Exactly. So I think Wednesday's going to be a big deal. Wednesday's going to be a big deal for us in the metal market. There's no doubt about it. Yeah, because
these top fishermen up here in Gloucester, they wear their shorts right through November. I mean, they're just wearing Bermuda shorts. So
that is so cool.
Keep an eye on them.
That is so cool. And folks, what happens is that I know that picture because I've seen them so many times, and it's really cool, man. I mean, because their legs are huge, too. I mean, you talk about working dudes, man, that can throw around pots like beyond belief. Going right by Frank's house, picking them up, picking those pots up and keep going, right? Yeah, I love it.
That's it.
I love it.
Hey, see you later.
Okay, man. Have a great one. Have a safe one. 877-927-6648. Let's go take a look at these futures and see where we're going, because you still have a seller out here in the futures, folks. I'm going to show you something. NQ. And we'll see what they decide to do coming into the close. NQ. Here we go. So you're going to see it's crawling back again, but you're going to see. There it is. You can see. And if the same seller is going to come in, he's going to come in any minute right now. So see that big downdraft? The big downdraft, there's 15,000 contracts on the way down. We pushed up with 8,800. And right now you are at, I forgot my phone. Okay, so we're at 8 minutes, and you're at 9. But the 9's still going against 15. You have a seller out there, and I suspect they'll be back before the close. Stay right there, folks. Come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien. Welcome back, folks. Dow Industrials right now down 37. You get the NASDAQ off 83. S&P's down 17. And yes, Tiger's informing me here. This is really cool. Powerball tonight, folks, okay? $1 billion. Now, here's the odds, right? Thanks, Pat, out there. 1 in 292.2 million, okay? But as the Tiger says, where can you gamble $2 and you still have that chance, even though it's 1 in 292.2? You know what the problem is, folks? Well, I'm telling you from a prospect that I don't play the lottery. I will tonight, though. I will tonight. There's no doubt about that. Is that you don't bet $2. You know, every time I do this, I don't play the lottery. Yeah, I got to tell you the story. I think I've told you the story, but you got to hear the story because it's hilarious. So, in South Boston, of course, you know, everyone ran numbers. That's how we grew up, all right? So, what ends up happening, my mother's on the phone. I'm like 11 years old at the time. I think I'm 12. I'm 12. Yeah, I might have been 12. So, 1962, right? Bottom line, she's got her bookie on the phone, right? And, you know, I says, hey, I want to play a number. And so it was a nickel. So it was a nickel for a number. I played the number. I hit the number that night. So a nickel, I got $30, right? So, oh, my, this is great, man. I got $30. So this is like $30 then was a fortune, right? I played the next day, and I didn't win. I still flipped out. I never played the number again. It was probably the best lesson I ever had. Because my poor friends growing up, football and all this stuff, and I gamble, but I don't gamble like that. You know what I mean? But anyway, and so I don't play the lottery either. But every time it's like this kind of money, I do. But then I go in there and say, oh, give me like 50 of them or something. You know, like, anyway. Go play the lottery for $2 because what the Tiger's saying is right. The bottom line is that there's no place else that you can get, you know, that kind of money for $2. And someone's going to win. That's how it works, man. Someone's going to win. So let's go take a look at some of these higher volume equities out here. You got, look at that, Meta's down to $5.50. You got Advanced Micro off 173. The GameStop, it's going to be funny if that starts moving again. That's up 39 cents. It's only $28, but we'll see how that shakes out. If we go into the NDX 100, the strength versus the weakness inside the NDX, you have Pinduoduo up 4%, Align Technologies 3%, that's a dog. Pinduoduo is a dog. Mercado Libre, that's up 2.5%. Airbnb is down 6%, 6.4%. You got Meta off 5%. ASML is down 3%. Let's go to Airbnb. So what's happening out here in Airbnb? So check this out first. You gotta see this, okay? So Airbnb is in a consolidation, right? Put this back here for a second. We put it on the weekly, and you can see the bottom line. You still have a high volume low that's laying out here at 99.72. When you actually take a look, and they're having problems now. This is really intriguing to me because, you know, what has happened is that you have hotel rooms that are costing a fortune. The travel business in general, let's go look at Marriott. If you look at Marriott, what you're going to see is, let's pull this up. Let's see. So you're trading 161. Yeah, and it's not a bad chart. I mean, the bottom line is, the lower COVID is 46 or 161, so it's not bad. So what's weird is that the folks at Airbnb, meaning the folks that rent their houses for Airbnb, they're having a really tough time. The rental structures are down almost 35 to 40%. The amount of bookings that they're getting. And, these premier hosts, they're having like a little revolt, and they're trying to figure out why this fell right off the cliff. I'm watching it because I suspect that part of the real estate business itself is highly leveraged. So, there could be deals in the next year and a half inside of that business. Because what had happened is that there's plenty of banks, okay, that, watch how this goes. The banks would lend on the cash flow and nothing else. Legit, they were legit cash flows, okay? But I know for a fact, I know this market. I know St. Pete Beach, Indian Rocks Beach, the Clearwater Beach. Our beaches are insane. And I know for a fact here is that the leverage was really high, man. I mean, the bottom line is that, they were supposed to come up with 20 to 25%, but the reality, I suspect most of them would come to 10 to 15%. Well, 10 to 15% in a market that, you're not getting your rents coming in could turn into a real problem for a lot of people. So it doesn't look to me like, actually, one second. Is the Airbnb coming out? I want to see that. They might be coming out with numbers today because, one second here. Because what I realized is that I heard when I was listening to TD Ameritrade today, they were talking about, I think they were putting a trade on for Airbnb. One second. Yes, that's it. Oh, no, tomorrow. Tomorrow after the close. Okay. So tomorrow after the close, because they were putting a trade on for this today. And so it's down $7 today. And, yeah, this is going to go after that swing low, man. We'll see what ends up happening. Well, and the bottom line is that we will know the amount of bookings that they're getting. And, the amount of fees that they do tag on, when I go back, when Airbnb first started, even I had a lot of them. It was a great deal. But then what happened, it seemed like everyone got into it. And then I wasn't making money on them. That's the bottom line. It went from making like a lot of money to like breaking even like pretty quick. And with that, and when that happened, I changed them to long-term furnished rentals. And that worked out really well. That still works out well. It's a different business deal. But on the Airbnb, what ended up happening is that, you're in season here, you can get whatever you want. In season here in St. Pete right now is going to be like insane. And the reason, unfortunately, is for the folks that from Sarasota South, there's basically nothing there anymore. So, there's something there, but you're not going to go vacation on there this winter. So we're getting a huge influx of everyone that, bottom line went a little further south. And I suspect that's going to, put some rental pressure under the market. We got to take a look at let's go take a look at Caterpillar. We got a couple of tigers and tigresses into Caterpillar out here. Caterpillar right now, so this had a break. This broke topside on earnings. Yeah, and you can't. What happens when you get something like this? I mean, this has to build some cause now. It is the light beyond belief. But you figure when you've gone from 7 days from $179 to $216, it's got to build some cause before it can get up to those highs. And then you got to watch out, of course. That gap's going to get filled. That gap at 199, that'll get filled. Just a matter of when. Stay right there, folks. We'll come right back.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Let's go to Rich in Oregon. Hey, Rich, what's going on, brother?
Hey, Tom, thanks for taking the call.
Absolutely.
I know we got short time here, but I own Coterra Energy. They're going to go with earnings the end of this week.
Let's take a look.
I'm
Below's
wondering,
18.
should I bail on it?
The high's
before
36.
earnings?
Yeah, let's take a look here. So this is... Okay, so focus on... Is it natural gas more than anything? Is that what it is?
Well, it's oil and natural gas.
Oil and natural gas. Okay.
Based on what's happened the last couple of weeks in Texas with, no place for the natural gas to go, that may not be the place to be.
Yeah, I'd sell it.
Okay.
The reason being is this. See where my cursor is right now? See, it's coming up to this area, right? And see how it went down like there, 21 million. Someone's a seller right there, and you're right at it. So it's like, yeah, 21 million down, and, 6 million up. Today's only 5 million. It's pretty dangerous.
Okay.
And, fundamentally, I mean, it looks good fundamentally, but and just as you said, listen, the natural gas business, look at this. This is interesting because they're taking in $2.4 billion. Well, they're bringing $1.37 to the bottom line. That's not bad, but bottom line is that, if they have to start giving away natural gas, that's going to be a problem. You know what I mean? And evidently it is, because if the pipeline's full, that means that they're not moving it, right? And it's full.
and there's no place to put it.
That's correct. And that's why it's at a negative. It was at negative 20 cents BTU per BTU on Friday. So we all got to brainstorm to figure out, man, because that makes 0 sense, right? It's like, okay, people are freezing and it's at minus 20. They'll pay you to take it out. Now you got to figure out how to transport it, right? Have a great one, man. Have a safe one.
Okay,
Always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great night, a safe night, folks. Come back and visit Tommy tomorrow morning. Kicks us off 9 in the morning. Great show, folks. Look at him, folks.